You spend months studying smart money concepts and traditional price action. You memorize every pattern, every single trend line, and every candle shape. But the consistency you were promised never actually materializes. Look at this comparison. On the left, a standard candlestick chart, entirely reactive, showing where price has been. On the right, raw market order data. This hidden layer is called order flow, exposing the exact intent of buyers and sellers before price actually moves. A trader's edge lies in diagnosing the mathematical data that dictates money flow, often minutes before a candlestick pattern even begins to form. The practical issue is that raw order flow data hits the screen in a blur of rapidly changing numbers. It is entirely too dense and moves far too fast for a human trader to parse manually in real time. To solve this, we apply quantitative mathematics. We take that chaotic stream of numbers and build custom indicators that automatically translate raw order flow into clear, predictive visual cues. Relying on these quantitative tools moves a trader away from guessing what historical patterns might do. Instead, you anticipate market reversals using live, structural data. The first specific quantitative tool we use to read this data is the L.O.M indicator. Its primary function is to spot market divergence. This graph shows a classic trap scenario. A market price creates a peak, followed by a second, higher peak. Most retail traders see this higher high and immediately buy, assuming the upward trend is confirmed. But look what happens beneath the surface. The L.O.M indicator's data line drops sharply during that exact same period. It reveals a mathematical contradiction. While the price went up, the actual buying volume was absorbed and exhausted. This divergence points to the exact moment institutional sellers step in and take control. The alert triggers and the market price crashes downward immediately. Surface-level price action is designed to trick retail money into buying at the exact wrong time. The underlying volume data gives you the roadmap to step out of the trap and take the other side. Identifying a specific reversal point requires broader context. To confirm the market direction, we deploy the flow matrix. Notice this vertical volume histogram positioned on the side of the chart. That distinct horizontal line marks the point of control, or POC. It identifies the exact price level where the highest concentration of trading volume occurred. We apply a strict operational rule here. If the POC sits near the top of a given price range, the system dictates action. A filter sweeps across the chart, removing every sell marker and dictating that you take only buy signals. The inverse rule applies for downward trends. When the highest concentration of volume drops to the bottom of the range, the filter isolates the data again, leaving only valid sell signals on the board. These tools, along with their accompanying AI telegram alerts, are not a blind cheat code that executes trades for you. They exist to provide data confluence, confirming the setups you already see on your screen. By deploying mechanical filters to determine trend direction, you strip human emotion from the equation. Trading stops being a game of intuition and becomes a purely objective data processing task. The cumulative effect of these filters, divergence for entry and volume profile for trend, translates to verified live results. During a recent test sequence using these indicators, the system captured 3 consecutive high-probability targets by identifying order imbalances that standard charts ignored. But possessing a highly accurate, data-backed strategy is useless if you don't have the trading capital required to properly leverage it. Look at the direct scale comparison here. Trying to compound a tiny personal account is a mathematically grueling, slow process. To see real returns, you need the massive leverage provided by institutional or prop firm capital. Securing a true edge in modern trading requires 2 interlocking pieces: high-level quantitative analysis and the institutional-level funding to execute it at scale. The structural solution to this capital barrier is partnering with specific, vetted prop firms like Funded Squad and Pipstown Capital. These firms offer operational advantages that specifically benefit traders utilizing our quant system. You get static drawdowns, zero spread environments, and relaxed consistency rules, giving the indicators the breathing room they need to operate. If you use the affiliate code CARTEL to access this funded capital, you receive significant discounts on your evaluations. More importantly, doing so unlocks my entire 5-indicator quant suite completely free. Trading performance scales when superior data tools meet the outsourced capital required to execute a high-probability strategy ruthlessly.